I'm a solicitor here at Dillon Solicitors, and today I'm going to talk to you about remortgage. So traditionally people thought of a remortgage as a top-up loan and they used it for home improvements. However, now people should start to look at the amount of money they're paying on their mortgage repayments, because there is huge competition in the market between the banks. Some are offering reduced rates, particularly if you take a fixed rate for a certain period of time, and some are offering cashback offers. So now is the time to think of switching your mortgage in order to save money on your repayments. Firstly, you should check your current mortgage to see if there's any penalties for paying off your mortgage early. Sometimes this can happen if you're in a fixed rate mortgage for a certain period of time, that if you switch mortgage during, say, the 5-year period, if it was fixed for 5 years, there may be a penalty. So you need to check that first. If there is a penalty, you should see what the penalty is, because the switch might be still more beneficial. It may be less than what the penalty would be. Secondly, then you should look to the market to see what offers are out there. Your current bank may not necessarily have the best rate, so you should look to the market, and a mortgage broker would be able to assist with this. Thirdly, then you should instruct a solicitor, as you will need a solicitor for the process. Firstly, your loan offer that will issue as part of the remortgage will issue to a solicitor, and as part of that, the solicitor needs to advise you in relation to the conditions of the new mortgage offer. Also then, the solicitor has obligations to the bank, so they'll need to certify the title to the bank, and what that means is they need to review all of your title documents to make sure everything is in order and that the title is perfect. Also, if there has been any works carried out to the property, the solicitor will need to review the planning and make sure there's appropriate architect certificates of compliance with planning and building regulations, and then they need to fill out a form which is called a certificate of title and provide that to the bank. They'll need to advise you in relation to the other items in your loan offer, and make sure you're in a position to comply with them. They will also request redemption figures from your current lender to see how much you need to pay back to them before you can switch the mortgage. They will then draw down the funds on your new loan offer, and they will repay what's owing on your current mortgage. They will then register the new bank's charge on your property and remove the old bank's charge, and when that's done, they'll send the title deeds back to the bank, and the bank will retain them until you wish to sell the property in the future or until your mortgage is paid off. We would always say that you should, once you've decided on a remortgage, that you instruct a solicitor first. I suppose the reason for that is, in order to certify the title to the bank, the solicitor needs your title deeds, and those title deeds are held by your current lender, and the solicitor must request them from the bank. Sometimes there can be a delay on the bank releasing those documents to the solicitor. It can be up to 2 to 3 weeks sometimes. So it's important that the solicitor has them before the loan offer issues, which means they can start reviewing the title, and if there's any issues or any further documentation they need, they can start gathering those before your loan issues, and it means then the transaction will conclude a lot quicker for you. So as part of your loan offer, there will be conditions. So one of the conditions will be that you have home insurance. Now, most likely you'll already have it because you already have the house and an existing mortgage, but the new lender's interest will need to be noted on the insurance policy. So it'll mean contacting your insurance broker and asking them to issue a letter of interest noting the new bank's interest on the policy. They'll also require you to have a mortgage protection policy assigned to the bank. So if you have a current mortgage protection or life policy, you'll need to contact the insurance provider and get that assigned to the bank. And they'll also want a new direct debit mandate set up, so the mortgage is repaid from your bank account. There may be other items that are conditions of the loan that you'll need to comply with, but we won't know until we get the loan offer what they are. We say the transaction should take 4 weeks from the day we get the loan offer, and that's provided we have your title documents beforehand.